Hey, this is Jeff Scott. This is my weekend review for September 27th, 2020. It's approximately 10:15 a.m. You open up my PowerPoint and let's get started. I titled today, as you'll see, did Friday signal a new leg up or is it a bull trap? I'll make the bullish and the bearish case and let you form your own opinion. My email address is hgsidoc@gmail.com. Just a couple housekeeping. If you're watching this on YouTube, in the lower right-hand corner, you'll see a gear. When you right-click on that gear, you should be able to adjust your resolution. When I originally post this, and for the first hour and a half, it will be horrible resolution. I recorded it in 4K. After about 90 minutes, they will update the video to 4K. If, however, you don't want to wait, under the remarks button, if you click it, you will see a link to my Dropbox where you can download the video to your desktop in lovely 4K. If you like what I do, please click the up arrow. I appreciate comments, positive and constructive negative comments, or feel free to reach out to me. This is for educational purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. I am independent. I pay for the tools that I use. I've got nothing to sell you. And trading involves risk, and you alone are solely responsible for any decisions you make. On this page, you can see a number of the influences who've contributed to my trading style. I suggest you get educated, you read, you learn, and you become your own guru. No one cares more about your money than you do. If I had to limit my trading tools because of economics, I would have TradeStation or Thinkorswim. I have a number of add-ons for it. And then HGSI and EdgeRater, I do most of my aftermarket analytics. And then I'm a big fan of both the Q and the Dr. K tools. The Q tools, freestanding, requiring Metastock data, and then add-ins for Metastock or TradeStation. And Dr. K, who just updated some of his TradeStation tools, has some great tools for TradeStation, Thinkorswim. Notice, I am never, ever, ever paid by any vendor when you buy something that I suggest or use. Any affiliate fee offered to me, I ask to be passed on to you as a discount. I am an unpaid volunteer, and this is just education. This is HGSI's website. Again, not me. This is owned by George Roberts. HighGrowthStock.com is a program that I've been using for quite some time. I'm very fond of it. Free 30-day trial, no credit card required, which is silly. I tell them that all the time. Under investing strategies are a number of videos by myself, Ron Brown, others, including Gil Morales. You have to know where you are in the market. There are three options here. We've just had 10% corrections. We formed a new bottom, and we're breaking out, and we're going to new highs. That's possible. Hard to believe because bottoms don't usually form at tops, something I learned from Dan Fitzpatrick, but that's an option. How about we're in a continued uptrend, we've had a short-term correction, and we're going higher? That's possible. How about we had a sell-off, we had a little bit of a retracement, and we're going lower? I think that's possible. I think all those are possible options, and if anybody tells you they know, God bless them, because I don't know how you could tell until later on in this week when we see where the market goes. Therefore, I've got to put some of my concern in this confusion, so I have raised cash, smaller position. I've sold premium, which means I sell calls out of the money. I sell puts way out of the money, and then I buy closer-in call or puts to protect some of my positions or make money on a pullback. On the sector review for Friday, all I did here is take a TradeStation radar screen, take off all the indicators, start with the indexes, some of the metals and futures, sector ETFs, and then I took each of the components of the 10 or 11 S&P sectors. Used to be 10, now it's 11. And you can see it's mostly green. If I look at Major Markets Plus, and we'll start here with the E-minis. These are futures. They may look a little different than the cash markets. High of the year formed end of August, early September. That's all-time highs. We've had a 10% or so pullback in the E-mini futures. On Friday, we had a clear reversal. Now, was this a one-day wonder? Or are we going to retest the 50-day and fail? Are we going to break through? More to follow. All you could say, or all I can say, is we're between the 50 and the 200-day moving average, and we had a positive end of the week, despite the market being down on the week 0.6%. NASDAQ futures, similar story, coming right back into the 50. High of the year being on September 3rd, all-time high. The Dow has not retaken its highs from prior to the market sell-off in February. And it, too, is stuck between the 50 and the 200-day range, a doji on Thursday, and what looks to be a high-close doji on Friday, which could be a bullish reversal as well. And then the Russell, which has not taken out its highs for several years, sitting down on the 200. If I look at the VIX, not as low as it was prior to the market meltdown, but it's come down quite a bit. It's above its moving averages. So if you believe we got volatility coming, then that's supportive of that. If you believe that the market's done going down and is going up, well, you could say the VIX is pretty much quiet. If we then look at the dollar, after a bit of a sideways move, the dollar has moved up over the last several days. On the weekly chart, you could see the big run-ups that we had, and then you can see these bottoming tails that have formed on the weekly as we had Thursdays and Friday this week, came back quite a bit. What about underneath? On the 10-year and 30-year notes, the rates trickled down a few pennies this week. The AD lines continue down with the stocks. You could see the AD line and the NYSE. Interestingly, in bright blue, turning up at the end of the week, was the Qs, and also up on the week in dark blue was a TLT, which is not a surprise considering that the Treasury yields dropped. If I look at breadth, I'd say it's weak but not oversold. Stocks above the 200, stocks above the 40, both in the lower third of their ranges, but not to an extreme. The 12-week new high, new low, or 3-month new high, new low, continues to fall. So it is approaching oversold and typical reversal areas, but still could fall quite a bit more. On the McClellans, we look for extremes, we look for divergences, we look for zero-line rejects. We had some pretty substantial divergences which have played out with pullbacks. Right now, we do not see a reversal signal. I started adding to my Apple, or going back into Apple, Microsoft, and other high-growth stocks on Thursday. Why? Because on Wednesday in the lower right-hand corner, I saw that over 30% of stocks in the S&P 1500 were trading below their lower Bollinger Band, 90% below the midline. Since 90% of a stock's time is between the Bollinger Bands, when I see large swaths of the market trading below their Bollinger Bands, either we're in a horrible bear, which I didn't sense, or we are going to reverse shortly. We did, and you could see there are very few stocks below their Bollinger Bands at this time, and not only 82%, which is still a big number, are below the midline. The Hindenburg Omen is a signal that occurs at major market tops and has predated every major market sell-off in the last 50 years. We're not at a top. I would not expect to see one, and we do not. Market tone, we look at the Woody indicator here in the middle. It's chop, although it's got some green in it, which it didn't have over the last 5 to 7 days, so improving. If we look at the market itself this week, we'll start on the right. This is the warehouse view in HGSI. Every Saturday, I save an archive view of HGSI. By doing that, I can go back and look at the fundamentals and various parameters of a stock and then see how, based upon those parameters, it walked forward. Instead of using today's fundamentals and looking at the best stocks, it doesn't, there's a bias unless you have the fundamentals at the beginning of a period, not at the end. So the top looks at ERG. ERG is EPS rank plus relative strength rank plus group rank, each 0 to 99, and plots the percent gain in the market versus ERG. Well, the first thing is everything is below 0. The only market that was up this week was the NASDAQ. The majority of stocks in the market were down. I always take and eliminate the first 3 and the last 3 zeros because the number of stocks in each of those is less than 20. If I go from here to here, there's clearly a line that shows that the higher the ERG, the better the performance. Unfortunately, in this case, that meant less of a loss. EPS rank, the higher your earnings rank, the better you did. For the most part, the higher the relative strength, the better you did. The better the group, kind of the better you did. But interestingly, stocks that were distributing the prior week actually outperformed those that were accumulating. Boxes on a short term I don't pay attention to. Now, let's keep this theme here about what was lagging led, and the stocks that I identified as my shorting warning system, they were actually up 3.38%. So if the stocks that look the worst that you think are going down actually ones that go up, it sort of goes along with what we saw in this picture. Mostly red, that's bearish, but IBD 50 was up 2.41. My holdings were up 2.13. Market Smith 250 was up a tad, and the S&P, as I said, was down about 0.6. So growth outperformed this week, but it was a bad week in the market. Sectors also chopping here, but a little green showing up. And just looking at the Q Edge tool and the Q Vital tool give me a great sense of what works in the market and where I might want to pay attention. The Q Edge tool, powered by Metastock, if I look down here, it tells me over the last month, all 11 sectors were negative. Over the last 2 weeks, 10 were negative. Over the last 1 week, 10 were negative. So we've been in a longer term negative period of the market. You know that. However, on both 1 and 2 day performance, most were positive, 10 out of 11. So we have a clear change in the guard. 5 days ago, the red, whether you were sectors, industry groups, or stocks, shows you the majority of the markets were bearish or down. And look at the last 2 days. There's a clear change there. Now, up at the top, the number one sector right now is healthcare. And you can see healthcare was strong over the past year, stubbed itself for a while, but over the last month has become one of the leaders again. Defensive real estate and utilities popped up this week, and you could see they were very weak earlier in the year. Energy has been weak most of the year, and two things that have reversed some are staples and discretionary. So I highlighted healthcare, I hit the gears, and I get a list of the various industry groups. Now, this is looking at the S&P 1500 sectors, which are broader based than the S&P 500, so occasionally there'll be small differences in the numbers. If I highlight these groups above 130 and I hit the magnifying glass, all the individual stocks in the S&P 1500 that are in these groups will pop up. If I hit these 3 stars, I get good earnings growth and undervalued, and these are the stocks that came up. I noticed that Vivo was up last week as well, so I decided to copy that and take it into Vital. I pasted it into Vital. I hit the little arrow. It tells me it's Meridian Biosciences. As I said last week, it's only got 300,000 shares a day, so it might not be appropriate for everybody. It's highly undervalued. That's the bright blue, and a good candidate for a short squeeze. Remember, the star says it's got good short-term earnings this quarter and last quarter. Prior to that, it was weak. Most, if not all, the stocks in the peer groups were positive. And now it started to bring in, and the list goes way beyond this, stocks that are not in the S&P 1500, but are in the same industry group. If I hit the peer analysis, I pulled up a big list, and then I hit these 3 stars, and these are the 4 that came up. Vivo, QDEL, AVTR, and Hillrom Corp HRC were undervalued healthcare stocks that might be worth looking at later. In fact, so I don't forget them, let me write them down. Vivo, QDEL, AVTR, and HRC. That is a fundamental analysis through Q, and then I would look at the charts. Now, the leaders in the market have been the Canaries. Canaries are FANG Plus. You can see the list above. Yes, I should change Priceline to booking. It's already taken care of in the chart, just not in the list. And you could see that we had a huge run up, a big correction, and now we're sitting right on the 50. If that was a stock, I'd say give me a kahuna and I want to go long. So I'm looking to see some momentum. A hold at the 50. Does the next move hold the fate of the bulls? I believe it does. Know your news and earnings. Friday is a big day with non-farm payrolls. There's a number of other important things. ADP on Wednesday, jobless claims on Thursday. They may move the market. Earnings are quiet this week as we begin the next set. Micron on Tuesday after the close. Bed Bath & Beyond before the open Thursday. Constellation Brands, Pepsi. So there's some major companies, but the volume of earnings is light. It's a judgment call to hold stocks over earnings. It's bad judgment to not know when your stock's earnings date is scheduled. Market thoughts. The week was a classic roller coaster ride. Ultimately left the S&P down 0.6, 4th week in a row. Dow down 1.8, Russell down 4. The NASDAQ, however, gained 1.1. The NASDAQ turned positive on Thursday and Friday as shares of Apple, Amazon, and Microsoft rebounded nicely on no news, rising between 3.5% and 5% on the week. You can see the one-year performance. The market is at an interesting inflection. Bottoms do not usually form a top shift. Perhaps there is market rotation again with some of the prior leaders coming back. News will continue to be a driver of the markets. I have to trade the market. I see nothing when I think I should see. Multiple signs suggest a bounce as we start the week, but all it's going to take is one piece of bad news to tip the scales. I am still cautious. COVID is having a new wave in Europe. We saw 1,000 new cases in New York, the highest number in weeks. I think you're going to continue to see rolls of waves of COVID until we get the vaccines. Israel is shutting down again. So I think there is still a lot of COVID risk in this market. I tipped my toes in the water when I got the signal on Wednesday to enter. However, I'm playing small ball, smaller positions. I do vertical spreads instead of the Scott synthetic. This way I reduce my risk. Various strategies around my Amazon positions to protect it. And I've tightened up on margin, rolled any deep in the money options up and out. And for those who believe in the old saying, you sell in Rosh Hashanah and buy on Yom Kippur, Monday is Yom Kippur. Now, in a few minutes, we're going to go through my process on the top down. The stuff I showed you already, I do every day in about 45 seconds to look at the state of the market. I compile my buy and sell list each week based on my top down and bottoms up review. I'm not necessarily looking for leaders. I'm looking for stocks that are actionable. I have various subgroups I divided to, like pullbacks ready to run. I list these stocks in TradeStation and with Radar Screen and Thinkorswim Market Watch. I may or may not take these trades. I do not know what the market looks like nor news flow in advance. I add to my list each night, and each trade requires additional work. Where are my stops? Price to enter, price to exit, position sizing, etc., etc. So we are 20 minutes in, and let's go and take a look at the markets. Now, in TradeStation, I have a view here, which is this view, but that's a different story altogether, that I like to get a sense of what the market is doing. And I've changed this from the past. I finally updated it with my new high jump, and I added Dr. K's Laguerre RSI. Up here in the top, the red arrows and the green arrows are John Person buy sell. The ones that have the circle around them are the Laguerre RSI buy sells. They often will overlap, but not always. The Laguerre RSI, well, the Laguerre RSI I think is a John Ehlers cycle tool. I think he came up with it, or modified it, adapted it. Dr. K's big additions has been putting the buy and sell signals in, and then in something like Sonar or Radar Screen or Market Watch, you actually can find stocks like, for example, tells me that it's just fired its Laguerre RSI, Agilent, and I should see right there that it just fired its Laguerre RSI. I find it's excellent at finding market reversals and changes in trend direction. So, E-minis. First I look at, is it a buy or a sell? It's in a sell. Weekly, on a longer term monthly, it's in a buy. What is the color of the paint bar? Green is bullish, I should be buying or holding. Red is bearish, I should be shorting or holding. And blue is neutral, I can do whatever I want. So blue is better than red. Blue, blue, and blue. Where am I in the outer envelope? I'm at the lower edge, which means at some point I'm going to go higher, but it can stay around the edges for some time. Fourth thing I look at is, are there these red dots, which is MACD divergence, or green dots, which would be bullish convergence? I don't see any of those, and they take forever for the signal to hit. Then I look at the weekly bongo, which tells me my longer term trend, which we know for the monthly is up. I look at the high jump bar, because whenever I get up above that dashed line, I am going to roll over, and we do every time. It's a great predictor. And then I look to see, do I have a signal on the RSI? So this is bearish to bearish neutral. The blue bar makes me feel good. The green weekly bongo makes me feel good. This would be a place that wouldn't be surprised to see a bounce from, but it has no reason why I can't continue to go sideways or drift lower. If I look at the NASDAQ, it will look almost the same. The Dow futures, interestingly, popped a Laguerre RSI signal, which then basically fell back more negative, so I would not put much weight on that here. Blue, still in a sell signal. And then the Russell futures. So looking at the futures, they are all similar and relatively weak. If I look at the dollar, you can see what strength looks like. Green, buy signal, upper part of the envelope. Nowhere close on the high jump bar. And notice the weekly bongo turn green. So looking at the futures, clearly the market has been selling off. Let's see in HGSI if I see anything that might make me think that we're getting close to a bottom. Let's go in Major Markets Plus, hit the warehouse view, make it go to top down view. And I have 28 in my group because I added some things. What's leading, make sure your combo rank is top to bottom, is biotech was number one, NASDAQ and FANG, and then IBD, NASDAQ 100, the dollar, interesting utilities, S&P 100, Russell 2000. On the bottom are silver, gold, NYSE, commodities. So, of course, I did okay last week because I buy a lot of NASDAQ, high tech, and growth stocks. All right. Now, let's take a look at the S&P 500. So what do I think is going to happen this week? So on HGSI, let's just stop at the top and work to the bottom. This is my weekly, well, what's white here is the Hindenburg. I haven't seen a Hindenburg in quite some time, but they're there all over the place, firing Hindenburg Omen signals, firing before the market sell-off. So when you see them, you have to at least be concerned that you might be getting a sell-off. One by itself is often spurious. A series of them typically shows a sell-off. Not all sell-offs are major. Second is the bongo. This is a combination of three different RSIs and price and moving averages to determine a trend. And the weekly bongo has been an uptrend since May. This is the new high jump. It cycles between plus 100 and minus 100. When it gets to the top, you expect the market to reverse. When it's on the bottom, you expect the market to reverse. Still wait for the reversal and to see the signal. Green candle low, red candle high. Why is this a green candle low? Thursday's day opened lower, closed higher. By definition, that is a green candle. If you look to the left, at the low, you can't find anything in the last 10 bars that was a lower low. Therefore, it's a green candle low. It could be a pivot and a reversal. Okay. These are some old fib lines. I've got 8-day exponential, 17-day simple, 50-day simple, 200-day simple. Down here is a ribbon of the person buy and sell signals. You get an arrow when you get the original signal. Then you get a ribbon so you know where you are. Here is the person market catcher. Notice it's gotten more positive as the market has gotten negative. There's a positive convergence. This bar in white is pocket pivots. You don't see any. Then you become the Eureka and Phoenix line, which are the HGSI synonym, similar to the IBD follow-through days. And then the kahunas and volume down here. These are just outsized moves. Now, my neighbor called me up last week and said, look, we got a Eureka. And I went and looked at my charts and I said, I don't see a Eureka. I know she used to be a cheerleader and she's a blonde, so that may mean but doesn't mean she's wrong. So I had to figure out why. And then I remembered why. And let me show you, because I bet she's not the only one. Here's the line we're going to look for. Let's right click, edit current view, and let's find the Eureka. Let's double click on the Eureka. Index to use. Right now, I'm using the NYSE. You can use the NYSE, the NASDAQ, or the Amex. Sometimes I use the NYSE, sometimes I use the NASDAQ. I'm not sure which is the right one, to be honest. It's designed this way because you could use both. But watch what happens if I use the NASDAQ. I popped up a Eureka. So you're right. You did see one. It's there. I'm going to continue with the NYSE. What I'm thinking I'm going to do is, if you hear funny noises in the background, it's my dog snoring. This stuff clearly bores him. I could do both NASDAQ and NYSE, and I may want to do that. I'm going to have to think about that. So that's why you don't see Eureka here, and there's no kahuna. So if I look at the S&P 500, notice this dashed blue line. I put this in this week. That's a 100-day simple moving average. Notice it pulled back and stopped at it on Thursday and bounced. Not sure if that's meaningful or not. It's interesting. So let's dissect this a bit because they're all going to be very similar. From the high to the low, 13 periods, 10.5% pullback. All right, correction territory. Maybe not a bad place to have a bounce. Now, let me see here. Let me do this. From the low to the high, here's the 11.6% retracement of that run. We are sitting at a 23.6% retracement, so that's a reversal at a fib line. We are above the 38.2% retracement, which to me, I'd have to break before I felt really concerned about this uptrend. So right now we're in a retracement in an uptrend. And we've got that 38%. We got the 200-day here is probably significant support down here. And you probably have some resistance right here at the prior highs. And we probably are living in a box right there. So, what do I think this market's going to do? Let me kill some of these recent ones. Three-road scenario, as Ian used to teach me. Road one, back up to the moon. Oh, that would be so nice if you're bullish. It ain't happening. That's not what usually happens. Option number two, market crashes. Well, it happened in February. It's probably not happening here. What's most likely? What's most likely is in my opinion, is we probably go up and fail sideways, and then maybe we break out. If I want to be a little bit more bearish, sideways and we break down. So there's 4 different roads. My guess is we are going to live in this area here and go sideways. We shall see. I got to play for a breakout. But I'm going to try not to be chopped up if we have a sideways move coming up. Those are just my unsolicited thoughts of the market. Very quickly, let's take a look at the Dow Jones Industrial Average. Similar, stopping at the 100-day simple. Let's look at the Russell 2000. Sideways here at a combination of the 200 and the 100. Let's look at the NASDAQ. Interestingly, right above the 100. An opportune place to jump, but this is a different market right now than it was in the run-up. On the NASDAQ, we corrected top to bottom, 15 days, 12.8%. It's a pretty real significant correction. If I look at the dollar, move off the bottom. If I look at the volatility, as we talked about in Thinkorswim, it's above where it used to be, but it's mostly sideways. And no surprise, with the dollar strength, gold is weak, broke down below the 50, as did gold miners, as did silver. So now you're thinking, you've been going for 33 minutes and all you talked about was the market. And my answer is yes, I'm a top-down guy. 50 to 70% of what happens on Monday is going to be determined by the market. I've got to know what the market's doing before I can even look at industry groups or stocks. Let's go down to number 7, which is industry groups. Hit the warehouse view. It pops up here. And let's go to 2-day up for us. So this is my 2-day momentum up. 68 stocks make that. 2-day momentum down. 68 groups, only 2 groups. So short-term, very strong the market might be. 5-day up, I've got 32 groups. So in the longer term, I've got 60 to the downside. So we have a short-term bullish, intermediate and long-term are still a little bit more bearish. Let's look at the positive momentum. And as a top-down investor, I go through usually every night the top 10 groups. I right-click, change to group. I only look at those stocks above the index. The first one I call garbage. I hope you played it and got out at the top. I wouldn't want to be in it now. This is called SPI Energy. And this is the market we live in the Robinhood world. Here's a stock that was a nothing. Flatline, dead. Who cares? And then on Wednesday, they put out a press release in the morning that they are a solar company that is opening up an electric vehicle division. It ran from $2 to $48 on Wednesday. Thursday, it popped up again, came back, and Friday, it dropped. Does anybody believe that that's investing? That's not even trading. That's like going to the horse race and you like the name of the horse without knowing anything about it. That's nonsense. I think that's garbage, and we'll see if it was like Kodak where there were some insider options and games played. But buy it at your own risk. Here's a stock, like for example, back here, number of shares, look down here, 1,000,003, 155,000, 150,000, 65,000. Then on the Wednesday, 348 million shares traded. Yeah. It smells. Not where I want to play. Sunrun, great stock. One of the big leaders of this year. Huge move up. It's extended. It's at near the high jump, but not at the highest point. Giving you a new buy signal, mobile breakup from a squeeze and a kahuna. Probably too extended for my taste. Jinx Solar also extended at the high jump. Good fundamentals. Again, extended for my taste, but something that I might look to buy in a pullback. The next two I like. Solar Edge, big leader, pullback to the 50 with the mobile breakout. And then Enphase I own, pullback to the 50, mobile breakout kahuna. That's my kind of a look. And I'm interested in the last two. And then Canadian Solar, sort of a high base here. Pocket pivot, mobile breakout, John Person buy, kahuna sitting above the 50 off the 17. Looks like it wants to run as well. Clearly some interesting things in the solar world. Biotech, the first two are COVID vaccines that have pulled back a lot. My problem with these have been valuation. $7 billion doesn't seem too much for Novavax. It has earnings coming in. And it has a little bit of revenue. There will be a couple of winners in the horse race for the treatment of COVID. Whoever wins will get a lot of money. It might be big pharma like AstraZeneca or Pfizer, in which case it'll be hard to see the change in the stock. Or it might be one of these one-offs like Moderna. NovaCare's got a little bit more to it than a Moderna, but I think it's rolling the dice. If you wanted to buy it, you're buying it at a decent point. Similar to Moderna, whose market cap is $27 billion. I think that's a little bit crazy on the valuation, but if it sticks the landing and it has the winning vaccine, that might be cheap. Cassava Sciences broke out with a Bible gap up, a flag, another Bible gap up, a flag, and it's running again. I am in Cassava Sciences. I would put this in the high-risk category. It used to be called Pain Therapeutics, Inc. Anytime a company changes the name, I'm always suspect. But the weekly bond goes green. It had the mobile breakout, the two Bible gap ups. Market catcher is strong. It's got a very, very short leash, major under accumulation. Regeneron had been a leader. It's rolled over. Is it done going down and ready to go back up? It might be, but I wouldn't be entering it yet. I guess if I owned it, I'd be happy that it's probably heading up. Automobiles, it's going to be Tesla. At least they have EVs. Pull back to the 50 and bounce, pull back to the 50 and bounced. It's just a modest amount above the 50 now, probably at a decent buy point, or you could set a buy point at the 50 and wait for it to pull back and bounce again. NIO is a Chinese EV company, sort of a sideways high base forming here. It's been doing well. Kind of follows the move of Tesla. Casinos, Penn National Gaming, I own that, and Caesars. That have been short win, but maybe it's time to undo my short. Penn National Gaming was clearly a leader I took the play that these small local casinos, which wouldn't require travel, might outperform. It's done very well. It had a secondary announced on Wednesday. Thursday it came to market, sold off hard, but had a nice day on Friday. I mean, the argument is, was the secondary to pay for a recent acquisition of El Dorado Resorts? Or actually, that was Caesar. Never mind on that. They had a prior acquisition. Was it to help pay for the acquisition, or was it because they're losing tons of money? Don't know. But I like the recovery on Friday. Scientific Games, I think they make slot machines. Big move here. All I can say is a big move. Probably run too far for my tastes. I'm in Caesar. This was the El Dorado Resorts, and Caesar came together. Churchill Downs, look at the multiple. 346. Yeah, I don't know how to play something like this. I mean, they have casinos, they've got the racetrack. It could be a good buy point. Pull back to the 50, mobile breakout from a squeeze, kahuna, pocket pivot, new person buy signal. And maybe I should be paying more attention to it. The one I'm short, and why am I short win? Again, it had to do with the travel and the fact that the 200 is sloping down and it fails at the 200. I've given it some room. I may or may not keep my short active. Depends on what the market does this week. Application software. Saw these guys really doing well this week. Zoom, COVID play, just off all-time highs. If you own it, that's wonderful. I have a hard time buying it up here. That may be short-sighted. Adobe, a nice pullback to the 50. Just show me some momentum before I jump into that. C, this is what momentum looks like. Mobile breakout from a squeeze, off a base, a kahuna, and a new John Person indicator. I do already own C. MongoDB, move up off the 50. Salesforce, gentle pullback. I love the company, especially at the weekly. You can see it's flagging. This may be okay. Not really a great buy point. DocuSign, is it a great buy point or is it on its way down? I don't know. I see no momentum. I'd probably skip it. Bandwidth was a big winner this week. Closed the week on Friday, although it had a big reversal day on Wednesday after a move up. Commercial vehicles, that's Workhorse, is usually the thing that comes up here. Sold off when Tesla sold off. I have a fairly significant position. I got in off of this base down here. I held on to the backdraft. Still up on it, although gave up some of my profits. I think it's going higher, but right now that's probably emotions because I own it. Cummings, sideways move, kahuna, pocket pivot, in a squeeze, makes a ton of money, pays a dividend. Not my kind of stock, but I like the pattern coming into the 50 with momentum. Cruise lines had a major upgrade. I've been either short or out of them. I'm out of them right now. Norwegian. I just, they're going to come back. I love cruising. My wife tolerated cruising. We're not cruising until my wife feels comfortable, so it's probably 2 years away. Norwegian doesn't look good. Carnival, no. This has been the best of the best. And remember I kept saying I should probably be buying it, but I was afraid of the 200-day, and then I thought it would hit it and roll over. Well, it certainly did. Now we're pinching the 200 and the 50. I am going to watch this stock, and what I want to see a break above the 200-day moving average, a retest as this thing continues, and a breakout. And then at this point right here, I'm going to buy the stock. But right now, I got to wait and see if it can break above that falling 200-day moving average. At some point, it's going to be something I want to buy. Publishing and broadcasting, Urban One, my neighbor told me that nothing really exciting about this company. If I just look at the stock, it has the same pattern as we saw with that energy company with the EVs. Came back down. Here we got a mobile breaker from a squeeze and a kahuna off of a low price. You have to know the news and do your research. Terrestrial radio, not a growth industry. Electric power and equipment, we'll just look at Blink charging. I gave this one to you last week, 1, 2, 3, 4, 5. On that move up there, it then traded down a little bit, closed a little bit above where I gave it to you. I still like Blink for all the reasons I liked it last week. And semiconductors, what a great story with NVIDIA. Pull back to the 50, momentum coming in. Probably one of the best run companies in the space. Makes money, leader. I mean, you buy this on pullbacks to the 50 and it's pulling back to the 50. AMD's pulled back to the 50. Different feel. This one rolled over. I didn't feel that with NVIDIA. I did add to Qualcomm or buy Qualcomm on Friday on its positive day. I'd like to see more momentum come in. It did take out its PSAR. All right. So I always go through the top 10 groups every night. And then I have a number of my favorite scans. Those scans are going to start to show up as my user smart groups. So every time I run it, this automatically updates. And let's talk about AmerisourceBergen Corporation. I have a fond part of my heart for these guys because they bought one of my businesses, two of my businesses. They are in the drug distribution sector. Healthcare passes through these guys, Cardinal and McKesson. Probably 90% of the dollars that go into hospitals, physician offices, clinics, come through one of those big three. They are operating machines. They have very low margins and high revenue. And this one has been beaten up and pulled down to its 200-day moving average. It's in a base. It's a low base. It's below the 50. It would be a better time to wait for it to break above the 50. But I had a green candle low at the 200-day moving average, followed by a mobile breakup from a squeeze on Friday, a pocket pivot. It's in a person buy. It had a kahuna. And if I go into TradeStation and I go into two different ways of looking at it. Some of my standard tools, taking off the moving averages, I broke through trendline resistance with a new buy signal. I'm in a Laguerre RSI. My OBV broke above the moving average. My JP person volume is positive. I'm coming out of a squeeze. I think this one looks interesting. Okay. If I look at it in Q, I see that, again, I took out this line of resistance. I may have some small resistance right overhead. Then I've got clear sailing up to this watermark resistance. I would rather this be blue bar here, but with this long bottoming tail, I just think I have something that is reversing from a downtrend in an industry group that I like to own, and I'm interested in ABC. Okay. Livongo is also interesting. It's in a acquisition by Teladoc, uptrend, sideways move, mobile breakup from a squeeze, pocket pivot, kahuna, John person buy. You got to love this one as well. You do a quick add to my buy watch in case it's not in there. Can't remember. These are some of the best fundamental stocks. Strong technicals, Canadian Solar, Enphase, Neo, Penn National, Scientific Games, Sunrun, all stocks we looked at. Good stocks with good earnings. I take my combination of my top-down and my bottoms-up analysis, and I end up with two watch lists. One is my buy watch. Let me just show you that. See if there's anything special in it that I want to talk about. Now, remember what I said in the beginning. These are not necessarily leaders. I'm looking for things that might be actionable. Okay? What's my favorite chart? I like Trade Desk. Big uptrend, sideways move, right below its chandelier stop, had a mobile breakout. Give me a kahuna on Monday and a break above this line. I might be very interested in buying it. Notice here in green, weekly and daily high close doji. That means there was a doji, and within 3 bars we closed above it. Also a very bullish sign. All right, I like that one. There's a number, Etsy, setting up here, same story, needs to take out its prior stop. Now within my buy watch, I have a various different groups set up. My favorite group is my pullbacks ready to run. So I'm going to look at these really quickly and then basically say goodbye. Anaplan broke out here on earnings, sideways move, mobile breakout from a squeeze, in a person buy, pocket pivot in kahuna. Is it ready to run again? Looks like it to me. Covetrus, sideways move, mobile breakout from a squeeze, kahuna, person buy signal, pocket pivot a day ago. Looks like it's ready to break out and run. MongoDB, sideways with momentum. Synopsys, uptrend, sideways, needs some momentum. Allogene, I don't like the fact it pulled back. It snuck up above the 50, mobile breakout from a squeeze and a kahuna. Any of these biotech companies, when you see a lot of zeros, they will go up when biotech goes up. They will go down when biotech goes down. Their biggest moves will come on the release of data at major meetings and publications and during takeouts. So you don't buy them for the day-to-day moments. You're buying them to take advantage of those events. Novavax we looked at. MGM, here's another one of these casino stocks going sideways, had a kahuna and a mobile breakout. Probably not my favorite looking chart. Audio codes, again, too far down in the pattern, but to me looks like it might be setting up. UPS, sideways move and a mobile breakout from squeeze, person buy signal and a kahuna. Be careful, this one's already extended. Set your stop probably at the lowest of the last 4 bars at the most. And be careful because it's a high risk buy, but it looks like it wants to go higher. Etsy we talked about, Teladoc we talked about, ABC we talked about. Lots of stocks look like this in the software infrastructure, run up, sideways move, and then look like they want to break out. Again, with person buy, kahuna, pocket pivots, and a mobile breakout. ServiceNow, we've been in this one for a while. Broke out back here in April, continues to do well. Amarin, a utility stock. Not great. It's mostly a sideways move, but if there's a time to buy it, it's got 2 kahunas in a row, which is always interesting me. A pocket pivot, a person buy signal, mobile breakout from a squeeze, 2.5% dividend. Upwork, sideways move, breaking out. Tandem Diabetes, my all-time best performer since I bought it at $3 or $4. Talked enough about that in the past. Not yet ready, getting ready, sideways move. Gaming and leisure, sideways move with 2 kahunas. Person buy, mobile breakout. I can tell you in Florida, they opened up all businesses, bars, and other establishments. Canadian Solar we looked at before. Enphase we looked at. Solar Edge we looked at. NVIDIA we looked at. Qualcomm we looked at. Waste Connections, don't know anything about it. All I know is I had a stock in an uptrend, tightening up as it goes sideways, took out its chandelier stop on Friday, mobile breakout from the squeeze, person buy, pocket pivot, and a kahuna. Makes money, but not much earnings per share growth. Those were some of my favorites. I have other groups that I call pullback waiting for a signal. It would be something where this has got to break above its stop before I'm interested. That's its signal. AMD, it's interesting, but do I want to buy it down here? There's a lot of people that bought it that are looking to take profit, to sell their stock. I like to see it get above its stop before I go in. I look for broken outs and running are stocks that have already moved a little bit. The Terra was one. The breakout was on Thursday. Look at this. 3 kahunas in 5 days. I like this one, Natura. So I have a number of different ways of looking at them. I don't even want to show you my shorting list because if there was ever a week, if the market bounces, the shorting list is not something that works. It's more to give me a sense of what the market's doing. For those that wonder, how can I do this all with a real job? I put everything in my sonar or radar screen. Those are 2 different scans I have. This one does not have the John Person. The radar has got the John Person, just different names for the same thing as far as the workspace goes. And I can monitor all day looking for the Laguerre RSI. So I can actually do this. Let's look at, this is, I've set up Dr. K's seasonal tool to tell me, oh, really? Let me go up here. It's supposed to be 20, 40, 60. Let's see what it shows me. I don't understand that. 20, 40. So 1 month, 2 months, and 3 months performance. And, okay. So then I want to find a stock that has a new Laguerre long that has what looks like good seasonality. So this EGAN comes to the mind. So then I might look at it here. So here's the seasonality, predicting it goes up. Here's the Laguerre RSI. It's in a wedge. I'm not interested. But I could start to look during the day and look at some of these stocks that may have okay seasonality that have a Laguerre RSI. Or if it's a tighter watch list of stocks that I'm interested in, understanding when they get this Laguerre signal may help me a lot. Like one of the cheaper stocks I was interested in, I don't know why it didn't show up, is MOBI. Whoops. Yeah. I don't know why this one wasn't showing up. I thought it was in my buy watch. Breakout, pull back to the 50, and a breakout here. Took out a chandelier stop. Bible gap up. Level breakout, pocket pivot, and a kahuna. And you notice that it showed up here. Let me get this, MOBL. 1 second. It had its Laguerre RSI 1 day before. So I use that, I look for that because it shows me stocks that are reversing. So I have my radar screen and trade station. These are Sager's and Dr. K's. In my radar screen, I will have my stuff and John Person stuff. I have them on different machines. And then in Market Watch, I have similar things where I could put my buy watch. And the Laguerre RSI is here. Seasonality is here. This is not the time of the year where I see a lot of seasonality. On that note, it's an hour. I'm going to say goodbye to my Jewish friends and family. Have a good fast and a good Yom Kippur, and we'll see you all next week.